Hello guys, welcome to a video of this week's price action. So this is going to be a lesson on price action itself, and just going to be a follow-up lesson on risk management and also psychology. I was actually thinking of doing a Twitter space on risk management, market psychology, but I thought a video would be better. Now, personally, I'm down minus 2.15% for this week, and I know some of you guys have complaints about, oh, we've not had a very decent week in months. Not months necessarily, but well, the first 2 weeks of April I had no losses, and then this week was really bad for me. So my result since March, since early March, since start of March actually, has been extremely inconsistent. I started out the year with a winning streak of no losses, and I think that set especially for a lot of you guys who are new, that's a lot of false expectations of not wanting to, coming into markets and not taking a loss, which is unrealistic. I am absolutely getting my ass handed to me in these type of market conditions, but again, a bad week for me does not mean I'm out of business, which is something I want. This might be a lesson in market psychology, so I think, because I just cannot help it. So let's get into it. Okay, a bad week for me does not mean I go into drawdown or I blow an account, which is what it is for a lot of you guys. A bad week for a lot of you guys is almost blowing your account or being very close to drawdown, to your max drawdown limit on your account. Okay. Throughout the entire month of March, I was still profitable, but it was not really significant. I had 2 losing weeks, I think. I had 2 losing weeks, 1 break-even week, and I think 2 profitable weeks. But those 2 profitable weeks were not significant profits. It was just a little bit of a profit. Okay, and I think I posted a tweet on Twitter how the entire profits I made for the month of March. On the first week of April, I outdid the entire profit I made for the month of March. In the second week of April trading, I still outdid. So essentially, from the last 2 weeks, if you're not counting this week, I more than quadrupled the percentage gain I made from the month of March, which goes to show you how risk management really is key in the business. Because when I have good days, or when I have a normal week, so a normal week for me is price action not going, which is where I really feel. That's where my system really feels. Okay, so I know where I'm more likely to fail, and I know how to deal with those conditions. And I've said this before. Okay, when I identify signature type profiles in the marketplace, I'm not going to be as efficient in terms of delivery because I'm slower at identifying signature type profiles. I only have about 3 or 4 ways of identifying these type of conditions. But over the month of March, and I'm being very transparent here, for the month of March, going into third week of April, I found out that there are, and I'm also learning too, I found out that there are other ways in which price can go into signature profiles like this. So if you're wondering what signature profile is, essentially the market is not expanding. Okay, the market is just running stuff on both sides. So if you look at Aussie from Monday, see what Aussie did on Monday. It ran stops and downside, ran stops and upside, ran stops and downside. Went higher, took out rejection block, went lower. So you're not making any money on Monday. On Tuesday, this is London session on Tuesday, because you're definitely missing this, because London session starts from here, so you're missing this execution. Alright, so you can see London session, there's literally no movement. New York session, it was a slight retracement. So if you're thinking browser is gonna run up into this, you're absolutely wrong. Okay, you are absolutely wrong. If you try to short this, price is not making any delivery until close of day, and that would have frustrated you out of the marketplace. And then on Wednesday London session, you get a run lower. Now, if you're trying to sell this run lower short and you're not catching the top, you're stopped out by New York. Okay, only way you're making money here is if you bought down here, which I don't think any of you guys are doing, because you're already frustrated from Monday's price action and then Tuesday's price action, so that was already absolutely frustrating to you. Now, if you go and look at dollar, so dollar Monday there was no speculation, but we saw dollar run higher, which a lot of you guys did not participate in. And then on Tuesday, we're looking for a continuation lower on dollar, okay? And that was not offered until the next day. So our further execution on euro was stopped at break even. So on Tuesday, I had a partial profit, two break even trades, and a loss of around almost 2% loss on one of the trades, which I recovered with the partial profit on US CAD. Then on Wednesday was absolutely horrendous. So I went in during lunch session with half my risk because I was down, okay, 0.5%. And I got stopped out initially, okay? And I went in again, 0.25%, because I was not wanting to see price run above this high. And what I was stating to myself was, if we run above this high, I genuinely don't know what we're going to do for the rest of the week, because that just screams seeking a short profile, okay? And I was right, because you can see after a run above the short MI, we traded back into that fair value gap I gave you guys from start of the week. Up there, run sell stops. Now you'll be thinking, oh, we're running sell stop, then price should most likely expand down here. Guess what? Nope. Trades down there, immediately reverses back up into this. If you're thinking, oh, this is a BPR, you want to sell short there, alright, let's start London session, okay? Going to today's price action, London session, okay, what was price doing? Nothing. Seek and destroy. Runs the buy side, runs the sell side, runs the buy side, runs the sell side. You are not making money in this range until New York session starts, and then price screams up where? Back up into this bear shadow block. Question is, don't you think there are people trading inside this range? Don't you think there are people selling short inside this range? Don't you also think there are people going long inside the range? They were. Okay, so if you are going long inside this range, you're stopped out, and then the market finally screams bullish. Now, if you're going short inside this range, now you're stopped out, and then people are buying the breakout of the run above the short term high. Guess what? The market aggressively runs lower and finally gets down here. Now, there was something I stated on the that was the live session Tuesday, and I said, which I'm going to talk on while I want to discuss market psychology and risk profile. Okay, I talked about the fair delivery. Okay, so that's the main topic I want to talk about today, and then I'll talk about what I think price is going to do tomorrow. Okay, the third delivery. Okay, now before I go into talking about the fair delivery, okay, let's talk about risk. Now, a very wonderful skill set, a very essential, not wonderful, a very essential skill set you must have as a professional trader is knowing how to mitigate losses, or knowing how to minimize losses. So I was trying to extinguish my scented candle. Okay. Alright, so you need to know how to minimize losses, and you need to know how to maximize profits. Now let me explain real quick, and it'll make sense. So I want this to be the one video that changes everything. And what I'm going to do is, I'm not just going to make it available to Discord. I'm going to make sure I make it available to everyone, so everyone can watch the video. I believe this video is going to change everything for you. Not in terms of analysis, okay, because there's a lot of concepts we can talk on when it comes to analysis, but in terms of market approach and psychology. So let's talk about this. A lot of you guys are new. You're coming to Discord, and you know me from, last year or early this year. And I go weeks without a loss. And I've told you guys before, that result in market is unrealistic. Typically on average, that's my performance. A lot of times I'll go a week. I go weeks usually without recording the loss, which is classic performance for me. But there are periods in time, and this year it's a little bit more extended than last year, because last year was only about a week or two, and then I'll be back to a winning streak. But this year it was 2 weeks, and then 1 week of decent price action, and then back to 2 or 3 weeks of shitty price action. Okay, and it was really terrible. And I got a lot of messages from students, and I think people were making even fake accounts to troll me on Twitter, which is fine. But I wanted to talk about this. A lot of people don't talk about the other side of trading, which is dealing with losses, and that is something you're going to have to get good at if you want to succeed in this industry. You need to get good at dealing with losses. Okay, so now let's do a blank chart and let's talk about losses. Okay, Think about every business you know right now. What company inspires you? Just think of a company that inspires. I'm sure a lot of you guys are thinking about Tesla or Apple, or I'm not sure, Google. But think about a company that inspires you. A multi-million dollar company or a multi-billion dollar company. Okay? Do you think there's ever a week they don't take losses? Or just ever a month they don't take losses? Or just ever a quarter? Because they measure their revenue on a quarterly basis. That they're not net negative. There is. But does that put them out of business? No. So if there are companies who record quarterly losses, huge companies like Tesla, you look at Tesla stocks right now, it's down. Matter of fact, a lot of tech stocks, they are down. But these companies are still in business. Why is a bad week, or not necessarily a bad week, why is a losing week for you putting you out of business? That's the question you need to ask yourself. And the problem is you're only viewing price from the perspective of an analyst. You're not viewing price from the perspective of a trader. And this is where a lot of you guys are struggling. Because you've been sold the idea of no losses. That's the dream for every trader. They want to go through and reap the benefits of trading without wanting to reap the suffering of trading. It's like wanting to be successful, but not wanting to go through the journey and the pain to be maturing to the person that wants to get successful. That's what a lot of you guys are right now. That's what a lot of you guys, that's your expectations of price. And I'm telling you, if you want to do this for a long enough time, you're gonna deal with losses. You're gonna deal with losing months. Guess what? It is fine. If you know what you are doing, if you can take losses like a pro, nothing in the market is going to ever phase you. Nothing in price will ever phase you. Because a losing week for you is going to be like minus 1%, minus 2%. And then for others, it is literally blown accounts. And then a profitable week for you could be, even if you're taking one or two trades. If you're taking one or two trades with a 1% risk, and you're making an average 3 or 4 hour, guess what? You're up 4%. Just one or two trades eliminate a week of losses. Or a month of average returns. You see? But you guys, you're not looking at all of this. You're only concerned with the immediate outcome. And that's the first problem when it comes to trading. You cannot attach to the outcome of your analysis. That literally is a recipe for disaster when it comes to trading. Do not attach to the outcome. Rule number 1 of being a trader. Rule number 1 of being a very good money manager. Do not attach to the outcome of your analysis. Focus only on the consistency of your model. Rule number 2, take losses like a pro. Okay, so now let me explain what a simple risk profile will look like for you. So let's assume this week. This week started out and on Tuesday we skipped Monday because Monday usually is low probability, especially if there is no significant release, but there's a major release coming out during the week. Then Monday usually tends to be low probability. Okay, so Monday we're not trading because it's low probability. All right, Tuesday we go into the market on Tuesday, and let's say we went long on USD CAD. We went long on USD CAD. Our stop was 10 pips. Our TP1 is 30 pips. That's a 1 to 3 hour. And the market stops us out. Now we're down minus 1%. And then we're down minus 1% on Tuesday. So let's do this. So this is for Tuesday. I'm going to show you how literally losses are not a big deal. Okay? This is on Tuesday. Now you're down minus 1% on USD CAD. Awesome. Now let's say you took this loss during London session. Now you find what you think is a good setup during the New York session on Euro, Fiber, and you want to take that trade. What are you going to do here? Because you're down minus 1% during London, and I know people will say, oh, well, use the same risk, because if you're using the same risk and your risk reward is a 1 to 4 or 1 to 5, then you're going to make back the profits. Even though you're going a string of losses, you can make back the profits easy. What people don't understand is it might not necessarily be that you're going on a string of losses. It might be that the markets are not just moving, and you cannot make money in a consolidated market except you're trading tersips, which are very difficult to pull off if it's a signature profile. Okay, if it's a trending market, I can trade tersips, fine. If it's a signature profile, it's very difficult to trade tersips. Okay, so now let's say you found another setup in Eurodollar. Are you gonna risk 1%? No. Why? Because you're already down minus 1% on the day. And I'm using this from the perspective of those of you guys who are trading prop firms, because that's the theme right now. Just barely any of you guys who are trading live accounts. You're all trading prop firms because you can get more capital trading prop firms. Okay, so this applies to prop firms. With prop firms, you have a limit of 10% or 8%. Okay, if you surpass 8% or 10%, you are out of business, and then you're going to have to redo the entire challenge, come back, pass everything. So this is coming to earn risk management. Okay, all right, awesome. Now you find a new setup in Eurodollar. Are you gonna risk 1% again? No. What are you gonna do? Half your risk. What's your target one? An average of a 2 plus R to 3R as TP1. Okay, and let's say you found a trade and your stop is 10 pips, and your target one is 25 pips. So target one is 2.5 R. And took the trade, and price is going your direction, and then all of a sudden, wham, goes and stops you out. Guess what? Now you're down minus 5% on the day. What do you do here? You stop trading. Why? Because you're clearly not on the side of price. You're not on, and the reason why I say you stop trading here is because it's very easy to get into a mindset of wanting to revenge trade. It's a fine line, and this is what I do personally. I'm not immune to FOMO in price. I'm not immune to over leveraging in price. What I've done is I've put checks and balances in place to ensure I don't go over to the dark side. That's what I call it. I call it the dark side. The dark side of trading is retail trading. Okay, retail approach to trading. So now when I say retail, obviously I understand we're all retail, but I mean the conventional approach to trading from all these goobers online who think you can only make profits every single week, and if you have a bad week, then that means you suck. Okay, that's what I'm explaining. All right, so US CAD, you're down minus 1%. Eurodollar, you're down minus 0.5%. You stop trading because it's a fine line between revenge trading and trading what you see or trading your model. Now, if you stop trading here, what you've done is you've prevented further losses. Even though you find a very good setup, you don't execute, because it's very easy to go back in and try to make it all back, and all of a sudden you say, fuck it, let me try and make all of this all back in one trade, rather than going back with a 0.25%, then go back with a 1% and try to make it back, and then you keep stacking more interest because you think you're right, and that can lead to blown accounts. So what do? Once you hit this limit, you stop trading on the day. And the best way to go about this is go your MT5 or MT4, delete the account for MT4. So that means if you want to trade, there's no way for you to trade unless you go back to your email, find the login info, input the login info. Okay, it's all stressful because you have to go online and go to the prop firm website and find the details of login information, and then have to trade. So that already deters you from going back in and trading. Okay, and number two, get off social media, because you can take a loss and then you go online and you see people who only post your wins. There's very few people posting losses. I know only about 3 or 4 people I can call my end on Twitter who post your losses. Everyone else, you're winning. Okay, they're always winning every single day. You're never taking losses. You're always winning. You're always flexing your wins. That's why I tell you social media is not realistic. When you take losses like this, get off of social media. Clear your head. It's you versus you. It's not you versus people on Twitter. Because what you're seeing on Twitter is not real. It's not realistic. You're not making money. You're selling your dream. They are not making money. I'm telling you this because I'm in a lot of their groups. I've seen a lot of your stuff. It's not real. Okay? Now you're down minus 1%. From Tuesday. That's painful. Awesome. Cool. Minus 1% Tuesday. Alright. You're down there. Now you go back to the price on Wednesday and you're looking to trade. What's your risk going to look like? Well, on Tuesday you had the string of 2 back-to-back losses. Do you go back in with a 1% risk? No. Why? Because on Tuesday you had the losing day. Now your focus is on bringing your account back to break even slow and steady. Trying to rush the process always leads to failure. Even though you might get lucky, and maybe you might go back in with a 1 or 2% risk and get a profitable trade and you recover everything back, I count that as luck. Okay, it was not intentional. You deviated from your model. You deviated from your risk plan. So to me, you're not disciplined. You're a failure. Even though you pass the challenge, I don't care if you pass the challenge over leveraging. You're a failure to me. Okay, because you're not going to be able to keep it up long term. Time always exposes. Time will expose you, and you get frustrated and you go back to square one. That's what always happens. So what do you do on Wednesday? Do you go back on Wednesday looking to revenge trade? No, because you were not on social media yesterday, the day before. So you're not seeing people who are only pushing your wins, and that's not influencing you to go on FOMO or revenge trade, so to get it back, and then go online and post on social media how good you are in trading. So now you're back, and then look for another setup on Wednesday, and you thought you found a good setup off a bullish order block on cable, and you took the setup with a 0.25% risk. Okay? Took it setup with 0.25% with risk. All of a sudden, boom, price stops you out. Now you're stopped out again during London session. Now you're down in total 1.25% on the week. What do you do next? Do you keep reducing your risk? No, you keep risk the same. Maintain your risk at 0.25% until you're back at, let's say, minus 1% drawdown or minus 1.5% drawdown. Sorry, minus 1% drawdown, which you can then go back to risking 0.5% on your trade. This is not for challenges. This is for live accounts. I'm teaching you how you keep live accounts, especially trading through drawdown periods. This is how you trade through drawdown periods. Actually, I'm going to title this. Let me write this down. So I don't want to get. I want to make sure I don't miss the title. Okay. The title is going to be trading through drawdowns. Okay, that's going to be the title of this video. I think it's going to be really important. And whenever you take losses, come back to this video, hear my voice, hear me talk to you, hear me talk about the realistic part of trading. Then Wednesday, you go back in, cable 0.25%, you're down. What do you do next? It's painful, you're down. But that's the cost of doing business, because no business ever only has a profitable week. So there's nothing special about a losing week. It's fine. Just know how to handle a losing week like a pro. That's all I'm asking of you. So you take a loss your London session, you're like, what's going on? And you're assessing price. And then you see on Thursday, there's a major economic release. There's unemployment claim numbers on Thursday. Do you keep on trading on Wednesday? No. Why? Because it's very clear that you're not inside the marketplace. So you skip trading. You don't force it, which is what I did on Wednesday. By Wednesday long session, once I saw prices not on my side. So on Wednesday, I took a 0.75% loss. On Tuesday, I was down around 1.4, 1.3. And I knew what price was going to on Wednesday. On Thursday at the numbers release. This afternoon, I was watching price, and I was saying to myself, cable is literally gonna rally off the order block because it's run and stop, taking sell subs out. So I know it's definitely going higher, but I'm not going to execute because of the losses this week. I'm gonna wait for a new start, for a new fresh week, and then I'm gonna assess if conditions are still like this or if price is going into the space, and I'll go back in, I'll take my trade. Now I'll explain how I treat accounts like this. So what you've done is you understood that you're clearly not on the side of the marketplace because you've had 3 back-to-back losses, so you sat that one out. You sat the rest of Wednesday out. Even though your setup presented, you're not forcing anything on. Okay, you're chilling, you're taking it easy. And I know it might seem, well, as a trader, you're always supposed to be trading every single day. No. The traders who make the most amount of money are the ones who are less active in price. The more trades you're taking price, the more risk you're exposing yourself to. Because every single time you put on a trade, that's a risk you're taking on. That's what a lot of you guys don't understand. Every time you place an execution, that is a risk you're putting on. And that could either play out in your favor or not. The ones who are successful in the business long term are the ones who know when to risk price and when to step back if they understand that they're clearly not on the side of the marketplace. Okay, so now on the week you're down minus 1.75% for that week, and you stop trading. Okay, you go on price on Thursday, look what the market is doing, you're not interested because you're clearing on inside the marketplace, then you stop. You say, okay, I'm gonna wait for a fresh week, let me get a breather, let me allow my psychology to reset. Okay, you journal price for that week during the weekend, see what you did wrong, see where you can improve upon, and then you come back next week. And then next week, Monday's shitty, Tuesday's not really good, Wednesday's FOMC, so you're not trading Wednesday FOMC. And then on Thursday you find your setup. But now remember, you're down minus 1.75% from the previous week. Now what do you do on Thursday? Do you go back to risk 1%? No, you don't. Okay? Rather than risking 0.25%, you can go back the next week and then risk 0.5%. Why? The only time you strictly risk 0.25% is when you are 3% or more in drawdown. Now your focus is no longer on making profits. Your focus is now on recouping the account. Hear what I said? Because your limit is 10%. Okay, so if you reduce your risk to 0.25%, once you're 3% or more in drawdown, then your attention is no longer on trying to make profit. Your primary focus is on trying to bring back your equity to less than minus 30% drawdown, and then you can go back to trying to make profits to end up being net profitable for the month. Okay, so on Thursday the next week, rather than risking 0.25% on Wednesday, now you're risking 0.5% because your psychology is fresh. You're waiting patiently for a trade. You found the high probability setup, and now you're taking a trade on Thursday. Okay, so this is a new week, so we're gonna call this week 1. So 20. Okay, so that's week 1 there. Then we're gonna call this week 2. Okay, and then week 2 is on Thursday. Then on Thursday you found an opportunity, right? Very easy trade. So let's use one from some like today. We can use one from today. All right. Let me not mess up with this. So this is the trade I was looking for today, which I'll cover this trade. So I was looking at the rejection block on the 15-minute time frame. Reason why, again, signature type profiles, price usually does something like this. So rejection block up here. That's what I was looking for. As target objective 2 and target objective 1 is this, and the buy was from this bullshit block inside an old 1 hour fair value gap. So at the numbers, I was literally watching this. I was saying this is a jitter swing. Okay, that's a good buy right there. Again, practicing discipline. No trades. No trades for your boy. And then you take something like this, and you're just looking for short-term objective. Okay, you just want to see price run above ODI from London, and you get that. Thursday, boom, price runs up, gets your target. That's a 4% gain on a 0.5% risk. Guess what? Now you're up 2%. Now, all right, let's go back. Risking 1.5%. Okay. Your USD risking 1.5%. Sorry, risking 0.5%, or 1 of 4 risk to reward. Now you're up 2%. Guess what? If you ended trading week 2 like this, at the end of the month, you're still up 0.25%. At the end of week 2, not at the end of the month. Sorry. By week 2, you're still up 0.25%. Now, what was special about week 2? Nothing. That's your average week for you. An average week for me is usually 8%, 10%, or 7%. That's a typical week for me. A losing week for me, since just this one time I lost. Let's see. I don't think so. I think the worst week I've ever had, I need to go and look at my journal, but the worst week I've ever had in literally a year plus has been 3.5%. My worst week ever. I came very close. I was down 5% at one point. That was last year. We traded CPI numbers, and my 1% loss in euro became a 3.5% loss in euro. And then I took a trade on GBP Aussie, which was a 1% trade, and that stopped me out. So that was a 4.5%. Okay, and that's why I told people, don't ever trade CPI numbers ever again, ever. Even though you've seen since the start of the year, if you watch the recordings, we've watched all the CPI numbers and dollar, and we've never gotten anyone wrong. CPI, FOMC, we've literally never had a wrong call, but we don't trade them because I respect the risk. And that's why, I diss people on Twitter who trade CPI numbers because they think you're immune to losses. What if you take a loss? Your 1% risk becomes 5% loss because price will bypass your stop loss. And what a lot of people don't know is brokers are allowed to do that during times of high volatility. It's in their agreement. It's literally there in their agreement. And that's why I told you guys, don't trade NFP numbers until after. Don't trade FOMC until after. Don't trade CPI until after, because you're just opening yourself up to unnecessary risk. And then even if your stop is at break even, they will bypass your stop and you end up losing your trade. That's why you don't hold a position over the numbers release, except that entry is far, far away from current market price action, whereby even if it's a serious spike, it's not really going to put you in significant a drawdown. Okay, so now week 1 you're down minus 1.75%. Week 2 now you're net positive 0.25%. Now even if you don't trade for the rest of the week, going into week 3 you can go back to risking 1%. And let's say week 3 Tuesday you find a very good setup during let's say London session, and you find a very, very good setup during London session. You're risking 1%. Okay, and that's in Tuesday and week 3. And you're looking at a 1.2.5 hour as your target 1. And you're going to take 70% off there. And then target 2 is a 1 to 4 hour. But in total, from the rest of the trade, you're up 3%. Okay. Again, let's say this is Aussie, and now you're up 3% on Aussie. Cool, you're up 3% on Aussie, and then you find another setup during the New York session on Aussie again, continuation setup, and take the trade. Are you gonna reduce your risk? Depends on your psychology. If you feel confident, you can keep your risk the same. But you're not going to take a re-entry if price stops you out. If you're trying to preserve your profits, usually what I do is when I'm trading the same day, if I'm up over 30%, I keep my risk the same. If I took a loss on the trade on a different session, I stop trading for the day. If I took a loss in the previous session, and I'm trading a new session on the same day, I'll reduce my risk. If I trade during a long session, typically I risk around 1.5% to 3%. If I'm trading long session, I took a 2% risk, and usually I don't take full stops. I take partial stops. Lately I've been taking full stop outs, which sucks. But if I'm taking a 2% trade and price is going against me and it's about to stop me out, usually I know when I'm more likely to be wrong, and I'll collapse around 1.2 or 1.3% per loss. And then go into the New York session, I'm going to reduce my risk to 0.75%, which is around half of what I risked, or 1%. And if I take a loss then I'm done, and I'll wait until the next day. I don't force it. And the next day, I'm not using 0.75% or 1%. I'm using 0.5% because my focus is on recouping the loss. So when I'm back into around minus 2% drawdown or minus 1% drawdown, I'll go back to focusing on the profit side of the business. But when you are in drawdown, your mindset should not be how much can I make. Your mindset should be on focusing on the model and reducing the risk until you let risk to reward bring you back into near break even on your account. If it is near break even on your account, then your focus can start shifting into getting a payout. And that's how you keep account. And that's the problem. A lot of people get funded, they post your performance, they're excited about the funded program, and they end up losing a week after. Do you know how many of my students who have gone through this phase? Do you know how many of, I don't post my students who get funded, but you're literally about 4 or 5 students who are getting funded every single week. I don't post about funded because, to me it's not a big deal. It's about getting the payout. That's all I'm interested in. Even if you get a payout, I'm still not, except with tag on Twitter, obviously. Okay? And they end up losing it. Why? Because your understanding about trading is so warped. And that's why you're never going to make it long term. Okay? All the traders I know, all the traders I look up to, Larry Williams, Larry Fink, George Soros, ICT, all the, like, these are the top speculators I look up to in terms of trading. They have periods of drawdown. They deal with it. Now, it might be rare for someone like ICT, but definitely Larry Williams and George Soros and Fink, they dealt with this. Again, one of the person I even learned from was Fink, founder of BlackRock. Okay, he had $100 million loss over a span of months in his old firm. $100 million loss. And that was where I learned about risk. And that was where it changed understanding about risk. And that led to the creation of Aladdin, which is what BlackRock uses right now. I think they own a stake in about 80% of all the private companies in the world. Like, they're the largest asset holders in the world. Their assets is in trillions. Like, I think around $20 trillion or so. I'm not sure. Don't quote me on that, but it's around like $20 trillion or so, something like that. Okay? But they all go through periods of drawdown. I'm going through one right now. And I'm trying to teach you guys that this is where you learn the most. But you don't know better. And you go on Twitter and you're annoyed and you're thinking, oh, it sucks because we had a losing week. I'm not bothered at all. But you are. Okay? I'm down to 1%. Next week, I'm going back in. We're trading with a 0.5%. Okay? Guess what? A 1 to 3 R, that's how many percent? That's a 1.5%. Now you're only down 0.5% on the week. If you did a 1 to 2 R or 1 to 4 R, now you're net positive. And you can go back to risking as usual, focusing on, getting a payout. And then if you go again 2 weeks winning streak or 3-week winning streak, as usual, now you're getting large payouts because now you're risking 1% and getting huge payouts. That's why I don't worry about losses. That's why I told you guys I can go a month in drawdown and I'll never even feel it. It's not even, bro. I could go 5-6 weeks back to back losses. And I'm not even going to be down minus 6%. Or even minus 5%. Why? Okay, by the time I'm down, if I was trading a live account on a prop firm, and I know the risk, the limit is 10%, which is unlike a live account, obviously. And I think prop firms are a good way to train yourself to be disciplined. Because, again, I tell my students, the payout from prop firm, use that to fund your live accounts, build up your live accounts. Just no guarantee that prop firms are going to be here if regulation comes. Okay? If regulation comes and prop firms are no longer here, guess what? You're going to have to start trading your live account. If you did not learn discipline, all this time the prop firms will give you an opportunity to make tons of money. You're going to blow your live account. Once you blow your live account, there's no registering for a new live account. You're going to have to work. Get a 9-to-5 job, work to get money again. Okay, these are the lessons everyone shies away from. That's why there are very few people who are successful. If you tell them the truth, they don't want to hear the truth. They want to be sold dream. The dream of Lambos and the dream of never going through periods where you struggle in terms of price because price is not offering what you want. I'm showing you in real time. I do the live sessions. I'm showing you in real time. But you're not learning. You think it's all sunshine and rainbows when it comes to training. It's not. Part of training is dealing with situations like this. We can end up next week going 2, 3, 4, 5 weeks, no losses. And you're going to see hundreds of people flock in. And it's like, it's all awesome. And it pisses me off. Okay? And I complained about this on Twitter. During February, when we went about 4 or 5 weeks without a loss, and someone shouted us out on Twitter, and I had about 100 people join my group in like 2 weeks. 100 people joined the Discord in 2 weeks. I was like, what the fuck, man? Because everyone's all, and that's why I knew they were never going to last. And I kept saying on my Twitter, I'm like, I want to see these same people stick it with me during periods of drawdown because they're definitely going to come. Okay? And I want to see their reaction because that's where you're going to learn the most. But watch it. There's gonna be these same people all going, oh, this person's a GOAT. You're gonna be the first ones to quit immediately. Because they don't want to go through the periods of lessons, hard lessons like this. These are lessons that shape careers. And I keep going back so because I'm making this available to you guys on Telegram, I keep going back to the example of my student. Of my defining moment when it came to one of my defining moments when it came to drawdown management, and that was when I saw ICT himself. That's like the main person I look up to when it comes to trading. When I saw him take, I think around 6 back-to-back losses, 2016. All right, 2016, 6 back-to-back losses. I don't remember him saying, a couple people dropped off his mentorship because they saw him take losses. Because you're like, if you're a mentor, why are you taking losses? And it was explaining how losses are fine, and how to go about dealing with losses. And I wrote so many stuff from that, just that one lesson. It was very impactful to me. Seeing someone being open about losses and how to deal with them, and the reality of trading, and I can navigate losses, and that really influenced my psyche. Not all the books on market psychology, and I love Trading the Zone and all of that, but again, it's good when you see someone doing it in person, in real time, navigating through periods of drawdown. You're going to deal with periods of drawdown. You have to accept that first, but you don't have to allow that limit you. Don't think about going to periods of drawdown. Don't be scared of taking a loss. You already know you cannot fail if you take a loss. Why? Because I've shown you about the risk approach. You've literally if you follow this, you're making it extremely difficult to blow an account. But then you're going to have to exercise patience to get out of periods of drawdown, and then when you are back in the zone and you've recouped your losses, you can go in, and like I say, you take what is yours. Right? Like I did. First week of April. Went into the marketplace your London session. Took what was mine. Done. Guess how much I'm up? 9.8%. Easy. On to the next week. Next week comes, I take 2 trades. Again, I'm up 7%. Easy. This week comes, I take about 6 trades. Okay, 3 losses, 1 partial profit, 2 break evens. Guess what? I'm down minus 2.15%. Am I worried? No. Are you worried? Yes, you are. Why? Because this is one of the first time you've been through stuff like this. In the past, the one guided you through stuff like this. So you over leveraged and you fumbled in and you blew your account and you got pissed off and you felt like trade would never work. And you came back and then you tried again and then you passed and they were excited and you posted on Twitter and Instagram how good you are, and guess what? You lost your account again. And it's that same cycle of ups and downs. Just no progress. It's ups and downs. Why is there no progress? Because you're doing the same thing. Albert Einstein says stupidity is doing the same thing over and over and expecting different outcome. That's what you've been doing up till now. You're doing literally the same actions. You're following what you saw on social media. And this is why I told you guys, don't allow social media influence your opinions of what things are. A lot of you guys, you go about life and your own thoughts are not really your own thoughts. Your own thoughts are things that were imputed by social media into your brain. And now you go about thinking that's what you think, when really that's not what you think. That's what social media put into your head. And now you have this false perspective of trading, this false perception of what trading looks like. And now you take losses and you're worried. Imagine you're trading crypto and you're down 100%. You would absolutely panic. Man, this was a very good rant. Okay, I'm gonna make it available to everyone, and I'm gonna title it "Trading Through Drawdown." Okay, because this is well needed, and this weekend we're gonna go into that. So I said I was gonna do a PDF on risk management for what's it called, funded programs and prop firms and everything. So I've not started the new prop firm yet. The reason why I've not started a new prop firm yet is because I want to deal with this phase of I'm recording courses and everything. So trying to record courses and trying to do a prop firm is a little bit too much to ask for me. Okay, so I want to get more free time on my schedule, and then I'll just roll out the content. Alright, so I'm going to follow up with a video on market analysis, market follow-up on deferred delivery, and then a forecast for tomorrow. That's for those of you guys who want to trade. And I will explain how you should go about risk approach and psychology approach going tomorrow. But I'm not trading until next week, like I've stated. And then when this Sunday, I'll get back with a weekly prep, and then next week we're going to go back into the marketplace to trade back as usual. Okay? So you guys will have an awesome week or weekend for those of you guys in Discord. Telegram. And I will talk to you guys next time. Be safe.